Toronto home prices are falling for an 8th straight month in November. Buyers and sellers, of course, continuing to assess the rising interest rate environment. Month on month, the benchmark home price fell nearly a full percent to $1.09 million. But the price declines are starting to moderate. This is the smallest monthly drop since prices began to fall in April. We're joined by the Toronto Regional Real Estate Board Chief Market Analyst, Jason Mercer. Thank you very much for joining us, Jason.
Good morning.
So prices still slipping, but at a slower pace.
Yeah, I mean, the initial impact of higher borrowing costs was obviously to see prices drop off to mitigate the impact of those higher borrowing costs. But we've started to see some support for price really since the summer. And so what was a pretty steep downward trend through the winter and spring has kind of leveled off. And as you said, we've been sort of ranging between, say, 1.07 and 1.09 million in terms of an average selling price over the last number of months.
Just can you remind us what geographical region we're talking about? What communities are included?
Right.
Here?
When we report each month at TRREB, we're talking about basically the GTA. So the city of Toronto and those surrounding regions, plus South Simcoe and Orangeville.
So Mississauga.
Absolutely. Yeah.
Huge. Scarborough, obviously. But you're not going out to Oshawa or somewhere like that.
No, we are. We cover Durham region, York, Peel, Halton, and the city of Toronto.
Oh, so, but what about Hamilton?
Not that far.
Okay.
Certainly if you look at our members' activities, I mean, they're active throughout the Greater Golden Horseshoe, but we're reporting the GTA proper each month.
Oh, okay. And viewers in other parts of Canada are rolling their eyes. Enough Ontario geography. The market is illiquid in the sense that the listings are down, 49% year over year, or they were in November.
Yeah, I mean, whether you're talking about last year and we were seeing a record level of transactions and record price, or we're talking about the last few months where obviously the market's been hampered by higher borrowing costs, the one constant has been a real constrained supply of listings, whether you're talking about single detached homes or condominium apartments. And looking forward, once we get to the other side of this impact of higher borrowing costs and we start to see people moving off the sidelines, the concern is, especially with population growth driven by immigration and record levels, that we're not going to see enough supply to meet that demand. And, credit where credit's due. We've seen a lot more policy initiative at the municipal level, at the provincial level to bring more housing online. It's now time to get shovels in the ground and start seeing more homes online in 2023 and beyond.
Do you get the impression, though, that a lot of people are sitting on homes that they just cannot afford with rates rising and they're just holding on like grim death?
I look at it a bit differently in the sense that, even before we started to see interest rates increase, we weren't seeing a lot of listings. And part of the reason underlying that is people just didn't feel confident that they're going to be able to sell their home and find another one that meets their needs. And now thinking in this higher interest rate environment and how market conditions have shifted, that may have given some people pause saying, I don't know if now is the right time to sell my home. But at the same time, the labor market situation remains very, very strong. We saw last Friday that labor markets remain tight, and we're seeing, decent wage growth on a year-over-year basis. So I think that's giving people confidence who are sitting in their home right now that they're going to be able to maintain those mortgage payments over the long term.
Yeah. Oh, I know not many homes are going on the market, but do you think there are a good few number of people who bought too much house and now they're in trouble?
I mean, I think that remains to be seen. I think a lot of times, though, as we move through the housing market cycle, the average Canadian household isn't given enough credit for maintaining their household balance sheet. I mean, if you think back to the previous recession in 2008, 2009, which was more housing induced than what we're talking about today, you still saw the default rate remained extremely low in Canada and certainly Ontario, and much lower than a lot of other Western countries, including the United States.
I think I've heard it said that once the jobs market rolls over, when and if, that's going to be really bad for real estate.
Yeah, and I think that'll be something that we're really keen in on when you're thinking about the housing market and just the economy more broadly as we move forward, is do we start to see a shift in labor markets? Obviously, last Friday, people were really paying attention to that vis-a-vis the Bank of Canada's decision and announcement this week. And right now, labor market conditions are remaining tight, and that's really across, a variety of sectors, the diversity of sectors.
Anything else in the data that you think people might be missing, or any trends trends that you think people should pay more attention to here?
Well, I think, again, I mean, we've seen home prices and to a certain degree over the last few months, home sales start to, flatten out a little bit. And so I think, we've seen the greatest impact from the higher borrowing costs sort of play out. And I think looking forward, it's very possible we'll start to see some of these home buyers that move to the sidelines move back into the marketplace. And we're actually in the market right now with Ipsos doing our latest round of polling, and we'll be releasing that at the beginning of February. And so that's going to speak to buying intentions as we move through 2023. And so it'll be really interesting to compare those data points to previous years to see, number one, how people have coped with higher borrowing costs this year, but also what they're planning to do in 2023 and beyond.
And what about, are there any separate trends you're noting for the detached home, the semi-detached, the townhouses and the condos? Is there different trends for them? Yeah,
there has been some divergence when you look at individual market segments. So certainly more expensive segments on average. So you mentioned detached and semi-detached. Those are generally the higher price market segments. You've seen a steeper drop off in selling prices there versus, say, condominium apartments that are generally seen as a more affordable category. And so the condominium apartment segment has remained tighter. You haven't seen as much movement on the price front as you have in more expensive categories, and it makes sense.